Hello, welcome back. It is good to see you. Part of real estate investing is actually finding the deals. But how do you know if what you're looking at is a deal that's worth pursuing? You need to know how to evaluate your property value as it relates to your business plan. And if you're like me, you need to know how to determine property values of apartments. My name is Tommy Brandt with TB Capital Group, where we invest in real estate assets with a primary focus on apartments. And today, we're going to be talking about 3 ways that you can determine the value of a multifamily asset. Let's get started. The first way to determine the value of a multifamily asset is what's called the income approach. And so this is where your property value is based off of your income. That's your net operating income. And then they take a market multiplier called the capitalization rate. And then the property value is basically your net operating income divided by your capitalization rate. And that is your fair market value. Just to give you an example, a property with a $50,000 gross annual income with a 5 market capitalization rate comes out to be about a $1 million property. Since this value is based off of the net operating income, be mindful of property financials that you see where expenses look really low or may be misrepresented or underrepresented in any manner. The second way to value multifamily assets is through sales comparables. Sales comparables, aka sales comps. And this is exactly like it sounds, right? You're taking another asset that sold recently that is similar enough, and that's your justification for your price. But the issue here is it needs to be similar in a lot of different ways. It has to be similar in square footage, the number of units, the year built, the unit mix, the class of apartments as well. And this is really hard in markets where there's low inventory or there just isn't another asset like this one we're looking at in our market. And the third way to value a multifamily asset is replacement cost approach. This is where we are determining what would the property take to rebuild from scratch. All you had was the land and you needed construction plus labor to rebuild it. What would that cost? This is more commonly a variable in the insurance industry than it is for the investment side of the industry. It becomes more relevant whenever there's been really unique or specialized upgrades, improvements, or customized structures have been added to a piece of land or property. And that is 3 ways that you can value multifamily assets. Most often, whenever we're looking at properties to hold as an investment property, we leverage the income approach, but all 3 are factored whenever we make a move on a property. I hope that there was something in there that was valuable. If there was, be sure to like and comment on the video and subscribe if you haven't already. If there's someone that you think this video would add value to, you have my permission to share it with them. And if you were like me and you like real estate investing, then check out some of the other videos on this channel as well. Thank you for stopping by. Have an amazing day, and we'll see you on the next one.